Crude oil WTI again has bounced back very strongly from the most important and most strongest support zone at 67 and 68, and in fact has seen a high of above 71 levels before closing the week at around 70.5. So now what to expect next week and also for the month of July? How can we profit trading crude oil? We will see with the help of charts followed with indicators, and towards the end I will summarize and conclude and give you the trading levels. So do watch till the end. And before leaving the video, just press the like button, share, subscribe and comment also, and also pressing the bell icon keeps you updated with the twice a day targets and analysis which I share for crude oil, first with the Asia session and next with the US session. Two analysis, two targets in a day definitely helps you in your day trading decisions. Do watch those also. Let's start. First, let's look at the daily charts. Now on the daily charts, 67, 68 is a very strong support zone. You can see multiple candles getting the support here and a bounce back is seen. It means that first of all, also lower highs are seen here, lower highs. And yes, there is a resistance there at 74. Earlier it was a flat top, now it is lower highs. So it is clear that it is trying to trade in the box. That is very clear. Second is the prices are not willing to stay lower. That is also very clear. A strong rejection is seen at across these levels, and hence because below 67 it has to achieve 65 and 64. In fact, below 65 this time it is to see 60 levels also, but it is rejecting these levels as of now. Hence possibility of a reversal also exists high. Now what has happened last week? See, 3 to 4 candles, 70.2 was the greater resistance. Since then it has breached the candle and it has traded bullish. Also if you look at, see, one important observation here is the body size here is getting diminished with every move. So the prices are not willing to stay bullish. This is indicating here. Second is the previous candle has also a longer wick and a tail on the upside. So now specifically you have to take care of 69 to 72 zone. This is the zone where we are going to see the directional move, that which direction oil wants to move. If it stays above 72 now, certainly that should be treated as a reversal point. Now if you just connect these two, lower highs are seen, which means a retracement is still, and then 72 levels is what you can see the top of this channel, though the bottom is almost flat with the resistance zone at 67, 68, and hence we have to now look at the lower highs of this channel, that is 72. Staying above 72, I will look forward to 74, and this time if it stays above 74, definitely we might see it hitting 78 levels here. Now this is the case when you see a rise in oil prices and it continues to stay bullish. Also, next observation on the daily charts, see the drop here. Twice it tried to drop or stay bearish, but then a failure here and it has seen a very strong recovery. Right now the complete movement is though skewed a little downwards. However, I still see this as a sideways movement. Coming to the weekly. Now look at the weekly charts here. See multiple candles. First of all, one bearish candle, a drop or a pullback candle, then a bearish candle, then a pullback candle. Now see the bearishness also getting diminished, the bullish candle also is getting diminished. But one thing is very clear, see the prices are not willing to stay bearish as of now, and that is why we can always see a stronger recovery. This means a strong breakout is awaited here, and hence any move above 72 should be taken up seriously. We can see beyond this 74 and then 76 levels on the upside here. Now if you look at the complete movement of oil for last few weeks, you will find, see 80 levels and 84 levels is the greater resistance next to this, and then 92 levels. Now see, if you look at the complete movement, you will find it is trading bearish between this channel, and this time it is not willing to stay bearish, it is trying to pull back here. Hence the highs of this channel might get achieved, which is at around 76, 78 zone, and if it breaks past this time it can try to break past $90 levels also. Why? Because see, it has seen the bottom of the channel. Now it should try to appear or achieve the highs of this channel situated at around 90. And also if you look at the complete movement, see the rise in oil started from here at 60, 62 zone. Now what has happened here is after this sharp rise, it has retraced close to this levels from where this rally has started, and the flag formation is complete. And from here, potentially a rise above 80 is what will give further bullish indication, and a move above 100 is what you should be treated as a breakout. So right now it is still trading in this bullish flag formation. Now this is on the weekly charts. Let's have a look at the monthly candle. On the monthly chart, see, after a couple of strong bearish candles, this month closed in green. It has a good wick on the upside and a very small tail on the downside. Now this also is a suggesting that it is consolidated here. Now consolidation here means, see, higher lows, lower highs. If you just connect the last two candles, you will find the complete movement between 68 to 73 zone. So this is still in the phase of consolidation here. Now for the next week specifically, one has to be watchful of 69 to 72 zone, which is going to still remain an indecision zone, because see, if you see this in a complete monthly charts, you will still find a largely broader range, but on the granular charts, that is on a daily or a weekly charts, you'll find 69 to 72 is the zone which it should break out. Beyond that 74, and then sky is the limit of the upside. On the downside now, below 69, 67, 68 is the zone below which you can expect 65, and below that a good crash can be seen. So this is what you should treat it as. Now let's have a look with the help of indicators. Indicators on the monthly chart, see, the moving averages are still trading with divergence, still are to be treated as bullish. I have not yet crossed over. However, they've started to look downwards, which is also a good sign that it has stayed bullish. The prices were extremely divergent from the moving averages. Now this is the time from where it can continue to start to diverge. A stochastic, which has dropped here, has retraced, now almost trading flat here. The MACD, now see, this is the time when we discussed in our annual review for oil in the beginning of this year that this crossover is happening at a higher level, and this must look for a downward move. Now what has happened here is beautiful formation here, rise, retracement, rise, retracement. Now second wave is done. So once it breaks, see, it has almost achieved the bottom of this channel, and hence potential reversal from here can be expected. This is very important observation on the monthly charts. RSI has also dropped a bit. Now it can continue with the upward move. Coming to the weekly, now see, on the weekly charts, the moving averages have crossed over here, and since then are trading with divergence. This is a bearish sign on the weekly charts for oil here. Now the 50 and 100 weeks average is also about to cross over. Now see, 75, 80, 20 and 50 or 100 period moving average, this is the zone where it is going to get the maximum resistance. Also, if you look at, see, after this consolidation, now 75 is the level. This is the first resistance zone, and 80 staying above this, you can certainly say that oil has lot much to see on the upside. So this zone again becomes critical. Now see, if you look at the stochastic on the weekly charts, almost is trading flat. Also, now look at MACD. This is trading at sub-zero levels without any clear direction. It appears it has hit a bottom. It is trading, waiting to consolidating here and waiting for it to break out. And if you look at the complete movement, see this, it is almost at bottom. Potentially, it can try to achieve the highs from here. If you look at the RSI, this is also trading flat here without any clear indication. Coming to the day. Now on the daily chart, see, the prices here again were trading with divergence from the moving average. It has seen the move here, till here. Now the 20 and 50 period zone, and that is why this zone becomes important till 72, because beyond that we may see 73.5, 74, and beyond 74 certainly should be treated for a breakout. Now if you look at the Bollinger Band, this is narrowed, and this indicates it is trying to squeeze, and the breakout from here is going to give bigger strides, is going to bring bigger momentum. Right now, if you look at the moving averages, these are trading with divergence, and these are trading bearish as of now. So till the time there is a conversion or a crossover, should not be treated as bullish, and a crossover from here should bring the bullishness there. A stochastic looking up, MACD is also trying to trade with a modest bias. Let it give a breakout, and then bigger move can be expected. RSI looking upwards here. So we have seen the charts, we have seen the indicators. Time for me to define the trading levels and strategy not only for next week but for the next month completely, such that you can stick to the levels and trade profitably, take your positions accordingly. And before I give you the trading levels, remember, before leaving the video, just press the bell icon. Also share, subscribe and comment to the maximum so that everyone can benefit. And yes, if you want to learn this art of trading, you should join my 23rd mentorship, where I teach specific strategies which can be applied to any instrument and to identify a profitable trade. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Also, you can be part of my Signals channel. Reach out to me for more details. Now first, let's talk about the levels to buy. Now here, I will recommend you to first buy at 70.8. Beyond this, 71.6 and 72. Now till 72, it has got very stronger resistance for oil here. And once it stays above 72, there is potential for it to hit 73.5 and 74 levels. Greater resistance exists at around these levels. Hence, these levels should be the next pit stop for oil. Remember, any move above 74 this time, we can expect 76.2 and 78 levels. And this probably could happen in a quick succession. If not next week, then yes, in the month of July also, these levels remain applicable. Anyways, for the minor or you can say day-to-day targets, we should watch my daily analysis. But yes, on the larger time frame, you will find these levels are being respected. So for the week specifically, you should watch out for first 72 and then 74 levels, beyond which certainly bullish momentum is expected, and we may see it hitting 80 and 84 levels later. If not this month, then probably next few weeks after this month also is possible. Now on the sell side, as I shared here, you can sell here at 69.8, rather I will say you can sell here at 69.8, but then 69.2, 68.8. This is the zone where it has got the maximum support here on the downside. Below this time we may see 68. And remember, 68, 67.5 and 67. This is the maximum resistance zone. Any drop, and this is already proven, I have not checked this, but this is already proven in the last few days. And if it stays below 67, this time we may see 65, and staying below 65, this time it is going to hit 62 and 60 in the coming few weeks. Specifically for next week, 69 to 72 zone is what you should watch out for. Beyond 72, certainly it should be treated extremely bullish. Hence, take your positions accordingly, trade accordingly, trade with a stop loss, trade with a trailing stop loss, join my mentorship batch or Signals channel. And yes, before leaving the video, just press the like button and share, subscribe and comment. Thank you very much. Have a great profitable trading week ahead. Thank you.